Hi everyone, my name is Sandiswa and welcome to my channel, Tax Shelter. Today I'm going to be talking about tax planning. Firstly, what is tax planning? Well, tax planning is when you analyze your finances from a tax perspective. Now, you can do this in many ways. Unfortunately, when it comes to tax planning, there is no one size fits all type of situation. In order to tax plan for yourself specifically, you would need to go see a consultant and then table all your finances with the consultant. Or you would have to actually sit down by yourself and actually analyze your finances from a tax perspective. Now, I know I said that there is no one size fits all, but I can give you a few tips that you need to look out for when you're sitting down and doing your own tax planning. Tax season starts from the 1st of March right up until the last day of February the following year. Now, if you haven't done your tax planning, now would be the best time to do it, simply because one, if you are employed, then you've had the month of March to see what your increase is and what your deductions are going to be. So basically now in the month of April, you more or less know how much you will be earning per month in the year 2022 to 2023 tax year. Now, if you're a business, you've had the month of March again to see more or less how much your business will be making per month. But it is important to take into considerations changes and also, because if you're running a business, you more or less know, if you are not in your first year, what your peak season is when it comes to your business. It is important to make sure you take into consideration all of those things if you are running a business. Now, like I said in the beginning, I'm going to be giving you a few tips and tricks to look into when you are doing your tax planning. Also, before I get into the tips and tricks that you can use or principles that you can apply when you're doing your tax planning, I do need to mention that you cannot do tax planning when you are submitting your income tax returns. By then, it is too late. I have had so many instances whereby clients come to me when it's time to submit their income tax returns and they're trying to pay less and they're trying to adjust there and remove that. You can't do that at the end of the tax season. It's just not possible, which is why it is very important to do your tax planning when the season starts. Because when it is time to submit your income tax return, I can't help you with any tax planning. The only thing I can help you with is to submit the return from the income that you've already received in the last 12 months. So it is very important to make sure that you do your tax planning in the beginning of the tax season, so that you don't find yourself in situations whereby you now need to be paying SARS a lot of money because you didn't plan properly. Right? Okay. One of the things that you can use, or the principles that you can apply when you're doing your tax planning, is donations. Now, what most people don't know is that every single year you have an annual donations exclusion of 100,000 Rand. What this means is, if you donate 120 Rand to your child, then of that 120 Rand, only 20,000 Rand you will pay. You will only pay tax on 20,000 Rand of that 120. Now, how can one use this for tax planning? Well, if you are, for instance, if you are parents that have children, and between you two as the parents, you have high earning assets, or you are wealthy, to put it in simple words, if you're wealthy parents, what you can do is, in order to decrease the amount of tax you pay, is to donate your assets, money, cash, house, or whatever, to your children, and then use the annual exclusion. Now, 100,000 Rand might seem little, but look at this, over 5 years, already you would have saved 500,000 Rand. So if you give 100,000 Rand to your children every single year, then you're not going to be paying tax on that amount, because you will be using the annual exclusion. Very important, especially for estate planning. super important to use the donations and your exclusions. If you have wealth and you have high earning assets with you, donate that to your children so that you can decrease the tax amount that you need to pay on those assets. Now, the second thing that you can use for tax planning purposes is retirement annuity deductions. Now, a year at the moment, you can save up to 350,000 Rand on retirement annuity deductions. It's very important that you know this because most people don't use this retirement annuity deduction. I don't know why. If you're in the 45% tax bracket, then that means you're earning a lot of money. It is very important that you use the 350,000 Rand annual exclusions for retirement annuity, right? Take advantage of that. Number 3, you need to take advantage of income splitting. There are different ways you can use income splitting in order to save on tax. One of the ways that are popular is using trusts. Now, I know with trusts at the moment, it's a bit of it's a tricky situation because SARS introduced what we call Section 7 of the Income Tax Act. Now, because of that, people are sort of like shying away from trusts and whatnot. But what I can say about that is that trusts are still very much an option to use when you want to do income splitting. But what you need to do is to make sure that you are using the trusts while being advised by a professional, because if you're doing it on your own, then SARS will come for you using Section 7 of the Income Tax Act. It's very important that when the forming of the trust, number 1, is done by a professional, and number 2, it's very important that you are upfront with the person that is forming the trust for you, that I want to use this for tax planning purposes. And that person must either be someone that has a lawyer that has experience with tax, or you must get a lawyer and a tax professional that's going to advise you properly on how to do this. Because if you mess it up, then SARS will be in there trying to get all your money using Section 7 of the Income Tax Act. So it's very important that when you're using trusts, you get a professional and you make sure that your trust is formed in a way that you are able to actually do some tax planning with it. Because these days, if you just form a trust just for the sake of forming a trust, chances are SARS will be able to poke some holes on that using Section 7 of the Income Tax Act. So it's very important that you use a professional, and also even after you've formed the trust, because things change, the new legislation gets introduced, it's very important to constantly make sure that you are using the services of a tax professional in order to make sure that there's actually some kind of saving that you are getting from the trust that you formed. But also, other advantages of the trust is that you keep your wealth in the family, and you also make sure that when you pass away, there is no fighting within the family. Your money goes exactly where you want it to go. The only thing that's important is to make sure that the trustees of your trust are people that you trust with your life and with generations and generations of your wealth. Because when you pass on, those are the people that are going to be making decisions about your trust. Super important. Now, the second last point that you can use, on another principle that you can use, is capital gains tax exclusion. At the moment, the capital gains tax exclusion for natural persons as well as special trust is 40,000 Rand. Make use of that. If you sell an asset, if you have earned some capital gains, then make sure that you make use of that exclusion. Or if you can see that right now you will be selling an asset in future, then plan around so that you are able to use that exclusion. Now, with capital gains tax, it's not only the 40,000 Rand exclusion that's included. There's many other exclusions. Ones that I'm going to mention is the 300,000 Rand exclusion. That is now for people in the year that they have passed. In other words, it's for natural persons in the year that they've passed. So in other words, if I pass away this year, my exclusion will not be 40,000 Rand. It will be 300,000 Rand for this year, right? Now, another exclusion is the 2 million rand exclusions for primary residence. Now, this is now a once-off in a lifetime exclusion. You can't get it every single time you sell your primary residence, unfortunately. But what this means is when you sell an asset that you used to live in or was used for living, then you get a 2 million rand exclusion, right? Make sense? Okay. And then another exclusion that you get is for personal use assets. In other words, if you sell your car that you use for your personal use, not for business, then you get an exclusion for capital gains tax on that asset. Or if you sell your fridge, or if you sell your furniture at home, all those assets, those are personal use assets. In fact, in other words, you use them for yourself, so you will not be paying capital gains tax on those assets. Another exclusion is a lump sum from an insurance or a retirement annuity, but this one excludes any second-hand policies that you might have. So that is all on capital gains tax. There are other exclusions. You can just Google and you will get them. The last tip or principle that you can use when you are doing your tax planning is actually none other than tax compliance. And the reason I've included this here is because, guys, it takes so much time and sometimes even money when you have to be disputing back and forth with SARS. So the best thing you can do for yourself is to just be compliant. It saves you so much money. Just be compliant, make sure your things are done on time, submit returns when it's time to submit returns, additional documents when SARS is asking for additional documents. Don't submit or claim for things that you don't have documents to prove for. So you just save yourself from all of that. And also make sure that you use tax practitioners that are registered, guys. This is huge, especially here in South Africa. People are getting caught by SARS left, right, and center because they're using fraudulent people that actually just want to take their money. Tips that I tell people is that if someone promises you a refund, that is a huge red flag. If someone is in the service of submitting income tax returns, then they need to submit your tax return just the way it is. They mustn't be telling you that you're going to be getting refunds and whatnot. No one should be promising you refunds. 2, if someone says that they're going to take a percentage of your refund, also that is a very huge red flag. Because remember, that person, if they're saying that they're going to be taking a percentage of your refund, then that means that they're going to be trying by all means to make sure that you actually get a refund so that they get a percentage. And that means that they can be doing things that they're not supposed to be doing simply because they're trying to make sure that you get a refund. And the sad thing about this is that you do get caught, guys. Yes, you might do this for years and years and years, but then as soon as SARS finds out, they go back to those returns and you get caught. And it's no longer even about now being fined and all those things. You can actually go to prisons for a very long time if you are found to have been involved in these things. So people that tell you that they're going to get you refunds, people that take a percentage of your refunds, a proper tax professional or accountant will tell you that I charge 100 Rand for submitting returns and that's it. And they're going to have their fees for everyone. They're not going to be saying that I take 20% of the refund or 5% or all of that. Those are all red flags. And sometimes, yes, it can be a professional tax person, but then if they're doing that, then that is a red flag. And also, guys, the nice thing about using a professional is that once you get, once they do some fraudulent stuff or you're unhappy with their service, then you are able to report them to SARS and then also their professional body, and something can be done about it. And also, another thing that people don't know is that if, for instance, myself, I'm registered with the professional body, if it does happen that maybe I mess up or maybe you lose out on a lot of money, I have insurance. Part of the fee that I pay to my professional body covers insurance for my practice. So in other words, if for some reason that I mess up a client's taxes and it's my fault, then that client sues me or I have to pay fees for that client, I am able to claim from my insurance. Do you guys get that? Do you understand that? So it's very important to use someone that's registered. It's important. When you do that, it's like going to a doctor that's actually not a doctor, but someone that says that they know the cure for headaches and what. Would you do that with your life? Why are you doing it with your taxes that actually eat up your pocket? Please, guys, don't gamble like that. It's actually very sad and embarrassing, and it becomes a huge mess when a person is caught out doing this. And in most cases, you'll find that they don't even catch you. They catch one, because normally people who do those fraudulent things, they normally have like many clients, hundreds and hundreds. So it normally happens that sometimes they catch one person in one of those clients, and maybe it's a client in Durban, and then they ask that person in order to reduce their sentence or the amount that they're going to pay for what they've been doing, they ask for their testimony. And then the person says that, you know what, so and so submit my returns for me. And then they go back and they check who are the clients that person is submitting for, and then that's how you get caught. So just make sure you are doing legit things when it comes to SARS, because SARS has had it. And they employed lots and lots of people to make sure that everything is done properly and they get all the money that they need. And right now, SARS needs money. I mean, you know this. So that's all for today, guys. And if you like this type of content, please like this video. Press the thumbs up button down below, and also subscribe so that you can see other videos. And also check out the rest of my videos here. I have tips and tricks and a lot of information that you can use for yourself and for your business. Thank you guys for watching, and God bless.